It's 4:30 PM, April 18th, 2023. I call to order this Budget, Finance, and Administration Committee meeting. Moment of silence, please. Mr. Root?
Yes, sir. Pray with me if you'd like to. Heavenly Father, it's a wonderful thing to be alive, and I'm appreciative of that. I think we all are, and I pray that we would use our time that you give us, each moment of time being a gift, for the highest and best use. And we can only do that through your counsel, through your guidance, through your Spirit. So I pray that you'd be here and that you would guide us during this meeting and as we go forth hereafter. I pray in your name. Amen.
Mr. Arrow, will you listen, please?
Yes, sir. I pledge allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Is there a motion to approve the March 24th, 2023 budget workshop minutes?
So moved.
Second. Any discussion? All in favor?
Aye.
That is 5-0.
Okay, presentation, Mr. Grant Davis with Alden G. LLC, auditing firm, presenting the fiscal year 2021-2022 annual comprehensive financial report, better known as ACFR. Mr. Davis.
Well, thank y'all for having me today to present the audit to you. First, I apologize for not being able to attend the last meeting as scheduled. My wife had our third child and just couldn't make it. So, anyway, I'll kind of go through, maybe as you're used to, a few things. I did want to highlight a couple of items. Ultimately, we've issued a couple of documents in conjunction with the audit. One is certainly the ACFR, the Annual Comprehensive Financial Report, obviously the bigger of the documents. The other one is what we call our Auditor's Discussion and Analysis, and I'm not going to go through that other than to just mention a few things about it and its purpose. And I'm sure you've probably heard a good bit of this in the past, but the first portion of it is really just a brief commercial, for lack of a better word, about who we are as a firm. Just after that, there is some analysis of the county's financial statement. Maybe more helpful in this, there are a few charts. You can just see revenues by type of the general fund, expenditures by type, and then there's some additional flavor, so to speak, as to how much the general fund spends a month, things of that nature. Beyond that, just after that kind of analysis portion, there's discussion of some things that we're required to communicate to you all as the county council in the conduct of the audit. And a few of those, I won't read them all to you, but a few of those are things like we're independent of the county. We didn't have any disagreements with management in conducting the audit. We didn't have any uncorrected misstatements, things of that nature. And those are all memorialized here. The last portion of the document is simply a look forward to future years and new accounting standards that are due to be implemented, as a brief discussion of their potential impact. So beyond that, I just wanted to give you a few highlights in the ACFR, in the Annual Comprehensive Financial Report itself. And you'll notice as you look through this, if you probably haven't already, you'll notice the Certificate of Achievement for financial reporting that was awarded to the county for fiscal year 21. That's on page 6, Roman numeral page 6, just a few pages after the table of contents. And the reason I highlight that is really above and beyond financial reporting. The state of South Carolina, your bond covenants, things of that nature do not require this additional financial reporting. And of course, this is graded by an international body each year, this document, and they've awarded that certificate to the county again. And I can't remember how many years in a row it's been awarded, but it's a number of them.
14, but we're not counting.
14.
Way to accomplish. Thank you.
So yeah, certainly something to celebrate. I think the last time I looked, a little under 50% of the counties in the state actually do the above and beyond the annual comprehensive financial report. So I don't know that we can necessarily say you're in rarefied air, but you're at the, certainly at the top in terms of financial reporting. Just beyond that, you'll notice in the financial section, which is actually the first page with a page number on it at the bottom, our independent auditor's report. And if you were to compare this report and this document to the one from last year, you'll notice that the report has been reorganized. In the past, you didn't get to our actual opinion on the financial statements until the second page. Due to some changes in auditing standards, that opinion's been moved front and center, first paragraph, and it's an unmodified opinion on the financial statements. And I know y'all have probably heard me say this before. That doesn't sound all that great, but it's really the only acceptable result in a financial statement audit. So that's a clean opinion on the financial statement. This opinion itself goes on for a few pages and references various portions of the document, our responsibility, management's responsibility, things of that nature. Just after that, you get to management's discussion and analysis. It begins on page 5 and goes for probably about 10 pages thereafter. You have page 5 to page 17, so 12 pages. If I had to suggest that you read one part, and you've probably heard me say this before, but one part of this document that is over 100 pages, I would suggest that you read this for the simple fact that it provides analysis as to why things went up or things went down, why the balances changed from year to year, whether that's revenue related or expenditure related or fund balance related. All things of that nature are provided there, and there is helpful data as to what has changed since from 21 to 22. Beginning on page 18, and for the subsequent several pages, we get into what we call the basic financial statements of the county. The first one on page 18 is the statement of net position. And this is a look at the county as a whole. So all funds, all activities of the county are rolled up in this balance sheet essentially. And they're broken into two really columns as it relates to the county. The governmental type funds, which is comprised of the general fund and a number of other funds. And then the business type activities, and the only activities in the business type are the Focus Fund and Rock Quarry Fund. So those are aggregated in the business type activities, and then everything else is in the governmental activities. But just a few items to note. Total assets at the end of fiscal year 22 of almost $228 million. Of course, the largest portion of that is capital assets, and that's largely infrastructure and land, buildings, things of that nature, and those are reported net of accumulated depreciation. Cash is also a very significant portion of the county's assets at about $53 million in total. Liabilities, $103 million. I'm obviously rounding as I go. The significant portions of your liabilities are primarily related to three things. One is the pension liability associated with the state retirement plans. That's the $25 million, if you happen to be following along, it's $16 million, two different plans, both administered by the state. So significant numbers there. Those did decrease from the prior year just due to the investment success of the investment trust during this measurement period. That will not hold up. They'll change again. But anyway, those are there. The other post-employment benefits liability is almost $13 million. That's in the form of retiree health insurance. That's another significant item. And then the last one is what we call long-term debt, or this is financed indebtedness for the purchase of assets, infrastructure, things of that nature at about $25 million. So that's essentially the largest elements of your liabilities. I will mention one other thing here. You may notice unearned revenues of $13.5 million here. This is related primarily to the unspent portion of the coronavirus state and local fiscal recovery funds. So the way that accounting works is that money was actually awarded through the U.S. Treasury. If it hasn't been spent by 2024, it has to be returned. So it's shown as a liability until it is spent. It's a little bit counterintuitive, honestly, but it's an asset. It shows up as cash and a liability in this unearned revenue, and then as it is used by the county, the revenue is recognized, that liability is reduced in the years that it is recognized. So all this gives us equity of $127 million, made up of a variety of components, mostly the net investment in capital assets and restricted portions. Unrestricted is a deficit 12 million. That's largely a function of the pension liability. In fact, if you were interested, you could look back at the statistical section of this document and go back circa 2014 and see how the implementation of that standard that required the recording of that pension liability on your balance sheet impacted net position, especially unrestricted net position. But anyway, nothing to be concerned about there, at least in my mind. And the net position total increased for the county by $4.8 million from 2021 to 2022. So from 122 million to 126.6 million, which is reconciled on page 19. Just a few other things to highlight here. If you follow over to page 20, you get the balance sheet at a fund level focus. And the general fund's primary interest, at least in most cases. A few things there. You'll notice almost $34 million in total assets of the general fund, liabilities of about $6.3 million, and this gives us fund balance of $26.2 million. And it's important when you're looking at that fund balance to not only consider it in total, but also to consider the unassigned portion. Unassigned fund balance for the general fund is about $11 million, $11.2 million at the end of fiscal year 22. The remaining portions are all broken up by various categories there. I will mention here, while we're looking at this statement, the Coronavirus State and Local Fiscal Recovery Fund has its own column. You'll see that it has assets of $13 million, that's the cash, and unearned revenue of $13.3 million. So that's that unearned portion that I mentioned earlier on the prior statement that will be recognized as it's used. Page 22 shows you the income statement for the various major funds. Again, the general fund being in focus here, $58 million in revenues, $58 million in expenditures. Then you have this section that's called other financing sources and uses, and you can, I think, infer from the various titles what that relates to. But at the end of the day, the general fund has an increase in its fund balance of $1.6 million from $24.6 million to $26.3 million from 2021 to 2022. The budget for the general fund is on page number 24. Probably relevant since y'all are in a budget meeting here today. A few things here. Total revenues budgeted at $55.5 million for the general fund. Actual revenue, like we mentioned earlier, 58.5, so a positive revenue variance of about 2.9 million. And then as you look at expenditures and kind of follow through to the next page, expenditures were budgeted at 58.8 million, actual expenditures of 58, so another positive variance. So overall, the general fund reflects a positive variance in that more revenue was recognized than anticipated and less was spent than anticipated, to the tune of about $3 million during fiscal year 22. Just beyond this section, you get into some additional statements. Pages 27, 28, and 29, and 30 are all related to the business type activities, being the rock quarry and the focused funds. Those two funds are reported there. The footnotes follow that. I don't want to take up too much of your time. I can go into great detail if anybody has any questions about anything, but the footnotes largely have not changed, other than obviously the dates and the numbers from year to year. Their structure is ultimately not changed, and the verbiage therein. Same thing with the sections that are called the required supplementary information, and then the statistical section is interesting to read if you have amnesia. Lots of data there on historical analysis, but there is a couple of other things that I really wanted to bring to your attention this afternoon. One is we've issued three reports, I wouldn't say opinions, reports is the right title in this document. The first was our independent auditor's report that I discussed earlier. The second is on page 134. And I'm going to get all the way to the back, but this is in the compliance section of the document, and this is our report on internal controls and compliance with laws, regulations, grant agreements, so forth and so on. The purpose of this report is not to provide you an opinion like the first one was, but to provide what we call negative assurance, which means if we noted any instances of non-compliance or internal control deficiencies while we were conducting the audit, we would be required to document those here and then communicate them I'm happy to say we did not note any noncompliance or internal control deficiencies throughout the conduct of the audit. So this is, again, a second clean report ultimately in this portion. And then the last one, the third of the three reports, is on page 136. And this one does offer an opinion, but this is our report on compliance with the spending of federal monies. If you spend over a certain dollar amount of federal monies, it requires a compliance audit. The federal government sets out its standards for compliance for various grants each year, and we're required to audit a portion of the county's federal spending. The county spent about $5.7 million in federal dollars. That means they have a federal source. During fiscal year 22, we audited three programs, the Airport Improvement Program, the Coronavirus State and Local Fiscal Recovery Program, and the Assistance to Firefighters Grants Program. And all three of those programs have received a clean opinion in this, starting on page 136. So no instances of noncompliance or internal control deficiencies relative to federal spending. Ultimately, all of this is summarized on page 141. You can look there. We've issued an unmodified report on the financial statements, which again is clean. We did not note any internal control deficiencies or noncompliance material to the financial statements or to federal awards, and have issued an unmodified opinion on federal award spending as well. That is a brief summary of a long document. I'm happy to try to answer any specific questions that you may have, if you have.
Yes, on the auditor's discussion analysis booklet,
Yes, sir.
under the management points, page 17, 18. I know the first point we've talked about for several years, and that's IT and cybersecurity, and I'm assuming you guys note that on everybody, because that's an ongoing process.
It is.
But number 2, capital assets, can you tell us about that?
Sure. So there's a concept in capital assets for governments called construction in progress, which is basically if you have a construction project that is going to be capitalized as an asset and ultimately depreciated, that those amounts spent during a fiscal year, and this really only is a function of a project spanning fiscal years. So it started in one fiscal year, maybe it didn't end that year and it went over to the next year. Well, whatever portion of that project was going to be capitalized should be shown as construction in progress and held as a capital asset. And the comment here is that there were certain items capitalized in a prior year as a capital asset that shouldn't have been, basically, that were shown as an addition to construction in progress and then subsequently removed. It didn't have anything to do with the project. They just shouldn't have been capitalized. So it is not something that we consider an internal control deficiency or material weakness or anything like that, but just a recommendation that as a part of capitalizing those projects that, again, usually span multiple years, that we pay attention to what should be capitalized ultimately and what should not. But that's really all that is.
We're going to do better on that, right?
Yeah, again, just a recommendation, not a slap on the wrist or a finding or anything like that.
Any other questions? Lot to take in.
Yeah, it is.
Mr. Chairman, may I ask Grant to clarify something for us? Grant, if you wouldn't mind, could you go into the negated amount for the broadband or focus fund?
Yeah, sure.
And how that may impact the fund balance for subsequent years?
Sure. So the focus fund has been kind of interesting to watch over the years. But at least for the last couple of years, it has recorded this, what we call a lease receivable, from entering into an agreement to basically lease the broadband infrastructure to another party. And then payments were to be made over a certain amortization schedule. If I remember right, y'all certainly know more about this, or can remember more about this than I probably can off the top of my head, but there were certain investment incentives to the original buyer. If they hit certain, if they invested $20 million, then they reduced the payment that they would make. If they, if they invested $30 million, then that further reduced the payment, things of that nature. In the recording of this year, there was another transaction involving the lease or the sale of the Focus infrastructure. And as a part of that, what we did is we took the original receivable from the first party that had rights to the agreement, and then what was to be paid by the second party And the difference between those resulted in a reduction to the receivable of about $934,000. It was exactly $934,000. And because essentially the Focus Fund doesn't generate any income in and of itself, you can even see there it has no revenues and hasn't for a while, if I can recall correctly, that in effect flows back through to the general fund. The general fund is the general fund has basically subsidized the Focus's operations, along with federal grant money from years and years and years ago. In the event that it would ever make money, then it would pay the general fund back. And that's basically what has been reflected here. The receivable reflects what is ultimately estimated to be collectible under this new agreement. Now, since it is an estimate, it could be that the company that owns it now, all of a sudden they're able to pay what was assessed as not being collectible. And if that's the case, then that flows right back into the Focus Fund and in effect right back into the general fund. But some payments were late. In fact, I think some payments were missed on the original agreement. If I remember correctly, that all has us have to analyze and assess the ultimate collectability of the receivable and the reporting of that. Again, unfortunately, any write down to that automatically flows back through to the general fund because the Focus doesn't make money on its own, at least at this point. Does that
It does.
Does that help?
Thank you. Thank you very much.
Sure. So all that to say, that write-off could easily be recouped. I shouldn't say easily, it could possibly be recouped. But to be conservative and the most realistic in the financial statements, we had to write it down this year to what we ultimately believe is collectible on the agreement. And that's not just something we came up with randomly, but with the testing and analysis of the agreements in place, past payment history, things of that nature.
Okay, any other questions? We appreciate all y'all's hard work. Thank you, Mr.
Thank you. Thank you.
Thank you, Grant.
Okay, discussion items, fiscal year 2023-24 budget discussion. Ms. Brock?
Thank you so much, Mr. Chairman, members of council, and members of the audience. I don't really think that we'll need to go over the entire budget book again. I think the important things have been highlighted in yellow, but I did meet with finance staff, with Amber and Liddell, several times since our last meeting. And our objective is to make sure that we are able to provide services as needed and expected while maintaining the most amount of fiscal responsibility that we can with the tax dollars and other revenues that we receive. In front of you, we decided it would be simpler for council and the public to have a completely updated budget book. Obviously, the old budget book is still online. All of you still have a copy. If there are any questions at any point, please stop me. I do have a tendency to speak quickly. It is not in an attempt to confuse anyone. Since I have intimate familiarity with this book at this point. So one of the first things, and you'll notice it's the second page in your updated book, is the budget summary document. This simply, Jean, I think it's back.
I do have an issue.
Oh, well, then it won't be up on the screen. Council has it. I apologize that the public does not. We can provide copies to be included in this up on the screen. Essentially, we're looking at continually decreasing the expenditures and anticipated revenues through certain funds. And we'll go back, Jen, where you were. As you'll see here, we decided to put, for everyone's convenience and ease, the green column on the right, the change in percent of expenditure from previous year to current year. We felt like this would allow council and members of the public to identify which of the line items and divisions of government revenue streams and expenditure streams had any significant changes in them. I don't know if y'all want to discuss each one of the changes that we made. Some of them were as minor as $5,000. Some were negotiating with other departments, from full-time employees to part-time staff. Some were receiving confirmation of state funding for some of the one-time capital funds. I don't know how much detail you would like for me to go into, Mr. Chairman, but I believe that if council would take a moment
and review the summary pages, each of the highlighted sections and the departmental pages that are directly related to the summary pages indicate the individual changes on those.
So go to each tab, the summary page, right?
So, yes, sir. So like here, if you'll look, just for instance, property tax, if you'll go to your property tax tab, you'll see where we anticipated a reduction in collection of property tax, therefore resulting in savings. So your property tax would have its own individual page. Am I making sense? That's likewise for the license permits and fees, and as well as the charges for services. So each one of the backup tabs, so to speak, to your summary page would have the individual, there you go, Jen, thank you. The individual line item that was changed that would reflect in that change on the summary page. Because your summary page obviously is just like a summary page, so it tells you categorically what those other collections are. So if you would go back to your property tax page, which in your book is page 9, you'll see that each one of these listed items is a property tax, but you'll see where the change was made in the real estate property tax collection. So as we went through, am I okay to go ahead?
Sure.
Okay, thank you. So as we went through, again, fine tooth comb, Jen, if you'll go to page 2, here's the expenditures. As you'll see, we had quite a few changes here. We evaluated, reevaluated, dotted, touched, looked at areas where we could potentially combine some utilization of service. We did receive a word today that we had a decrease in the one-time capital. We will be receiving some state funding for the camera system at the detention center, resulting in a savings of almost $500,000. Our grants administrator this morning said that she was almost certain that the grant she has recently applied for the body camera, again, for the detention center, would be approved by state funds. So anywhere that we could find in the budget to reduce the expenditure on the county behalf and obtain that revenue source from another stream, that is exactly what we did. We have cut a little more than, do I have a total here? I need glasses, that's what I need. From your previous budget, we cut a little more than $700,000, which is, at this time, a little more than 1.3 mils. There may be positions for consideration that as we go throughout the course of the year. The probate judge, as you all know, was elected in November, sworn in January. His request was for 2 positions. I spoke with him this morning and met with him. He feels like that he is capable and willing to try for one of the full-time positions to go to a part-time position. The difference in hours is from 37 and a half hours a week down to 29.5 hours a week, resulting again in a savings of almost $20,000. Should that change need to be made, I assured him that council would be fond of consideration at a later point in time, but I felt like if we could at least try it this way, that might be the best thing for us to do. The new positions on your previous pages, the funded positions were not highlighted, and I don't know if it was completely clear. The addition of the positions, Jen, that's page 22. There we go. So only the ones with the yellow highlight are funded in this budget. There were several that were requested that didn't make even the sheet for the request. We believe that we can, if I have a saying at the county to my department heads and they hate it, but if you can pull a wagon with 6 horses, you can pull it with 5. More importantly, we have a large correction to make from your previous book. Jen, that's page 23, please. On your previous books, and we still don't know how this happened, you have a tendency to hire human beings here at the county, and the human beings, of course, have a tendency to err. But the assessor's office for fiscal year 2021 and 22 in your previous books all had zeros. We cannot figure out for the life of us why or how that happened. I just want to go through this because our employee totals in the previous book were incorrect. Anything that changed or was updated or corrected is highlighted in yellow. I think in the previous book, we were off like 23. We typically take the information and do an auto import on a different spreadsheet that goes back to this document. Again, I apologize for the error. We cannot figure out for the life of us how that happened unless we just hit a wrong key and it imported the requested ones, but we still don't know how it happened. Again, there was a big count that was off because it had 0 employees in the assessor's office until current year, which looked like we add like 23 positions for this 1 year. And I just wanted to make sure everyone knows that that previous sheet is just garbage, trash. We should not have that in there. As you flip through the departmental pages, I don't know, Mr. Chairman, if you would like to do this. I'm just going to choose one that has a change on it for reference. Jen, if you can go to page 42, please. Again, I just chose one at random. So each one of these departmental pages, like this particular department, is in general government. Any change that was made from the budget you already had that was given to you on March 24th is highlighted in yellow. And all of these will be decreases. There were a couple of departments that we had some like wonky numbers for Social Security. One department that had the workers' comp was wonky. A different department that had travel that had $380,000 for a previous year. So again, we just went through fine-tooth comb to establish the corrections and again, dot those I's and cross those T's. Going back to the summary page, which Jen doesn't have, or the budget summary page, the step and scale is still included in the budget document. It is all on the administrator's page because until council gives us direction to do so, as you know, the step and scale would be distributed based on the number of years of service that a staff member had been here. Instead of us doing each individual staff member per department, that number again is as close as an estimate to up-to-date payroll information as we can supply. But I do believe that number would change probably no more than $105,000, and we'll bring that number back to council, but we would like some direction moving forward on that. Your new positions, again, just a minor decrease there. The fuel contingency, we did increase by $13,212. Awesome, thank you, Jen. One-time capital, again, we're looking at those grants. Met with the IT staff. We are in a position that we can look at some capital purchases in current year for cybersecurity that work in conjunction with the capital equipment needed for next year. So we were able to shorten that expenditure, decrease that expenditure request. Judicial services, of course, that's your part-time position there. Economic development went down just a little bit. We had 2 separate line items for maintenance on buildings and grounds. One of those had been created in error for when the Destination Oconee signages were created. Non-departmental stayed the same, of course. Debt service stays the same, of course, and your other financing uses stays the same. And those reductions here, you'll see just a small amount. Property tax, intergovernmental remains the same. A decrease in your license permit fees. Thank you, Jen. Fines and forfeitures remains the same. Charges for services, a small decrease there. Investment and interest income remains the same. As well as miscellaneous and other financing sources and the use of fund balance. And you'll see the reduction here of $723,036. there are any specific departmental questions, happy to go through those. If anybody has any specific questions about the general fund expenditures, any of the changes that I previously highlighted, happy to address those as well. Mr. Durham, I have information that you had requested, and I think this is a great question and something I believe we'll start incorporating into the budget annually. It's difficult to do on our side for a proposed budget to tell you what percentage of a budget, say salary or utilities or maintenance is, because the proposed budget is not yet in our software. It's very hard for us to run reports on something that's not already in our software. You know, it doesn't go in our software until it's approved. But as of today, for current year, Mr. Durham, I hope this helps, salaries is 63.4% of the annual budget. We have other expenditures, maintenance on buildings, grounds, electricity, water, sewer, garbage, utilities, basically, that are 2.24%. Safety and non-capital equipment, postage and operational is 3.17% of our budget. Capital is 3.15% of the annual budget. Vehicle maintenance and this is countywide, is 1.47%. Gasoline for vehicles is about 1%. Diesel is about 0.5%. And the rest are miscellaneous and other that were, like telecommunications is 1.13%. That is an interesting take on how we look at our budget, because we know then when we start looking at making cuts on the budget, where the places are that we have the most expenses. So if we're going to make cuts, we would either need to do those capital cuts that we hope you're happy with today, especially with the announcement we will be getting the $500,000 for the upgraded camera system at the detention center and for the body scanner out of a grant. Does anybody have a discussion item? Did I go too fast?
Chairman.
Yes.
So I had talked with Mrs. Brock, and I think I talked with everyone to some extent, maybe except for Julian, about, so, and Ms. Brock pulled some data too that's in here. I don't know if everybody has this or not.
They do.
We did.
So, I'm a firm believer that a budget shouldn't grow faster than the growth of the county plus inflation. And so I went through and I pulled numbers, and I talked to Ms. Brock to pull numbers, and I pulled CPI data to February of each year. You beat it previous 12 months, because I figured that was the closest data that would be available before you present a budget to council. And, and I pulled numbers, two budget numbers from 2016. Most of that time we had, almost zero inflation to very little. And obviously now we're experiencing rather large inflation. But that's turned, it looks like it peaked in June of last year at over 8%, and it's fallen. Actually, the March numbers was at 1 year over from Southeast, it's 5.3%. But if you go to February, which is, I think that's a fair month, because it'd be the last one we'd have, 6.4% inflation. And the Census Bureau said, we have growth of 0.54%, but we know we have more growth than that, because we have vacation homes, student housing, things that aren't counted in the Census Bureau as residents, but it is a population subgroup. And from the auditor's office, we have 1.08%. And this information is for calendar year 21 to calendar year 22, which would be the time when we have the highest inflation. I have for 23, I put that for the budget year for last year, because that would have been from February last year to the year prior. I had 8.4%. But I'm a believer that we should be less than that. I don't think it should be a target. I think we should shoot for less than that for sustainability for long term. I mean, as we grow and as inflation goes, government expenditure has to grow. I mean, you have to pay your employees adequate wage, you have to provide services as the expenses go, you have to pay deputies, hire deputies, firefighters as population grows, so we have to account for that. But if you look at a number since 2016, a change in spending average per year has been 5.67%. And inflation plus population growth has been average of 2.96% per year. So we're close to doubling the growth of government to the growth of the county with inflation. And I would like for us to get that within line. If you use the numbers from February, that would put a estimated target budget or not to exceed at $65,230,000, or say 231. I think that's the target we should shoot for. I think it's sustainable long-term, right now, and Mr. Elliott, he brought up a point when I spoke with him earlier, the state law says we have to have a balanced budget. But what that forces us to do is we budget to a number versus budgeting to a need. I think we budget to a need, sustainable long-term affordability to the taxpayers. You talk to people who live in, I don't want to throw anybody on the bus, but other municipalities or cities outside this county that are maybe more affluent, the government grows to a point to where the average taxpayer, they no longer generational can't afford to live there. So I think sustainability for long-term, I think we could match or be less than growth plus inflation. I think that would be ideal. I see right here what Ms. Herbert supplied for fiscal year 21 and 22. That was 8%. That's what I have for last year's budget. I think most recent numbers to February is what we should use. And I believe we're going to come back here next year because what the Federal Reserve's doing is going to continue. If you look at a graph, and I need to print this, but I mean it's diving pretty significantly. That's my thoughts. I mean, what is somebody else?
So let me ask you a question. I understand what you're saying, and number one, here again, I'm not the sharpest knife in the drawer by any means, but it's my understanding, take June of last year, that 9% was inflation year over year. Okay, so prices went up 9%. Now, let's say inflation is 5%. That's being measured year over year. So that's March to March. So you have this compounding effect on inflation. You can't say that prices from 2021 to 2023 has only gone up 9%. You know that from the grocery store. It's gone up more like 20 to 25%. Now, these numbers get thrown away. Last month, gasoline went down. This month, gasoline's going up. That's been a huge factor in how inflation's measured.
So if you,
But I hear what you're saying. The question is, okay, we're at 66, what?
$66,349,186.
So let's just say $1.3 million come down, $1.3 million, right?
a little
Okay,
bit,
where do you propose we come down? I mean, I'm open to anything.
I propose to that limit of $65,230,000.
So how do we get there?
Well, I would like to direct the administration to look and to continue to look with department heads and find savings.
Well, you and I discussed this, and I'm good with that. And I've got some data. I'll share it with you if you want me to. But to bring the revenue down, we've got to bring revenue down. So you bring property taxes down. For instance, if you bring it down $2 million, the man in New Jersey who's rich, his $2 million house on the lake at 6%, he's going to save $500 or something. The $100,000 house with the homestead exemption is basically break even, $5 or $10 one way or the other. Same if you take out the homestead exemption. That's from Mrs. Hubbard. So if we bring something, right now, we got no property tax increase. We haven't had one in years. Maybe the first year I was on council, but that's it. My recommendation, if we could find how to save $1 million, that right now we're transferring $1 million from the rock quarry. Rock quarry really needs that money, as far as I'm concerned, to continue to build up, because we have to buy more land for the rock quarry. We're going to have to buy more machinery. So we don't transfer that $1 million, so that brings down the revenues $1 million. Now you got $400,000 more to deal with, but other than that, but we got to find how we reduce that $1.4 million.
So I agree, I mean, with what you're saying on, there's some people pay more taxes than others. But on the flip side, you can say if you raise taxes, then, it's not hurting the little guy, it's hurting, the more wealthy has been able to pay for it. But to some people in the county, to people here, $20 ain't a big deal, but an extra $20 at tax time may be the difference in buying medicine that month. But there's other ways, we can find savings. But I believe in continually, as the millage increases, if we match your growth, inflation, population, then providing a tax break to the citizen versus it going the other way. Even if we don't raise the millage rate, as the value of the mill rises, taxes is still rising as you overturn property. You talk about homestead, and I know Mr. Mize has talked about homestead exemption, and I don't know if this is a possibility, but the state sets it at $50,000. Does state law permit a county to come in and say, hey, we want to another 10, 15, 20 of exemption?
No, it does not. It's a state mandate.
Is there a way you could perform it as a tax rebate?
I don't know about that.
So the term tax abatement's thrown around. That's really an unlawful term. We can't give an abatement. We do that in the context of a special source revenue credit for economic development deals, but otherwise you cannot forgive taxes, you can't waive taxes. Everything comes from the state level, and it's required to be uniform throughout every county in the state, so that's why we can't tinker with it.
Now, the step increase is done in 2 years, right?
That is a 2-year period for implementation, yes, sir.
So what if we do it in a 3-year period?
We could do it in a 3-year period,
So what would that reduce current increase by?
or the total. You have the yellow book?
Before we get into that,
Sure, Mr. Davis.
what graph or what information are you?
Bureau of Labor Statistics.
So I did supply, Mr. Chairman, if I may have a copy of this on your desk. So, Mr. Durham, the state doesn't calculate county inflation. I think that the compounding, and forgive me, I'm not an inflation expert. We've had some of the most unusual financial circumstances over the past 24 months. But I did contact the state to ensure that the information that I was providing to you as council was accurate, and they do calculate growth with a set inflation rate, and Oconee County is set at 9.08. And that's the allowance they give for millage. Now, I included the school district on this document as well, but each one of the municipalities is included. I didn't include them on this because it wasn't relevant to the conversation. And so there is some, I don't want to say a difference of opinion, but we have always in the past established or run the county's inflation and CPI through the growth from the state South Carolina Office of Revenue and Fiscal Affairs.
Mr. Davis, you have something?
Yeah. My main question was asking, I guess, from Bureau of Labor, so that's what I figured what you were talking about. When you're, I guess, picking a number and going with a number rather than looking at what the needs are, the needs may only be 61 million rather than 65. So if we're trying to budget to a number rather than budget to a need, to me, that's kind of going against what you're, kind of saying, because it's like, let's spend it all, and we have not spent. I think just from that audit, you can hear the amount of money that we have been able to put back for fund balance that, in my opinion, had gotten extremely low for a number of years, and I know it was from the broadband. But, you know, oh, the broadband's gonna pay us back. Well, as we all look at it, the broadband was supposed to serve another thing, and it's getting better, but it has not paid that money back. So when, let's call it investments, are made in the community that may not have a return of money, you're looking at a return in other things, from a return of economic development, from a return of that. And so you're gathering the growth without gathering additional tax burdens on the people, especially those that are in that lower end tax bracket, because those are the ones that, I mean, they are affected by property taxes, but they're more affected by inflation. So in regards to the things that we do in this county, we can do things that bring that lower income level up through education, through better jobs, through quality of life, that we continue to make good investments in. Because, I mean, yeah, we could budget, I mean, we could probably go through and make a $40 million budget if we really wanted to. Cut half the police force, half the fire, cut down, close the parks. We can do a bunch of things and just operate on basics. But to me, that's not what the general public wants us to do. So, I've never budgeted to a number. I've budgeted to what we've needed in this county. I've budgeted to things to keep us in the right method. So if you want to pick a number of 65 million, that's easy to do. I mean, I can go through and pick some things out, and we could cut out, $1.5 million all day long. But what's the long-term repercussions of doing that? Again, as we heard today, what we've continued to put back in the fund balance, because, I don't know how much money we've shelled out during that tornado. It was devastating to us. It was devastating to the city of Seneca, but it could have been larger than that. And we have to be prepared for that. So the main thing I look at is what our taxation rate is across the board. What's our taxation rate on a $100,000 home versus other counties, and what our taxation rate is on cars. And obviously with cars are going to continually go down from the day that you buy them. Houses, continually, hopefully, go up if we're doing a good job. So the one thing that I think we can do is definitely work on decreasing millage to keep the taxation rate the same on those homes and recoup some of this investment that continually comes in here, especially on, the 6% side of things. Which again, I mean, obviously people are building vacation homes here for a reason. But there is some major needs in roads. Before I cut $2 million out of a budget, I'd put $2 million more into roads. I mean, we can spend money all day long in roads. And that's a definite need, not just in county, but in statewide. So, I mean, that's just my 2 cents on that.
Yep, any other discussion?
So with that being said, I believe that the growth of the county government should not exceed the growth of the county or outpace inflation. Since 2016, inflation and growth is around 21%. The growth of the county budgets are approaching 46%. So I'm going to make a motion to direct the county staff to develop the budget to be within $65,231,000.
I'll second it.
Any discussion? All in favor? All opposed? Aye.
The vote is 3-2.
Any other discussion? If not, is a motion to adjourn?
I'll make a motion, we adjourn.
Second.
All in favor?
Aye.
Aye.